Welcome to County Portal, your simple source for local government services and public records. Let's get started.
Does the IRS track your Cash App transactions? The short answer is yes, but it's not about them spying on you for splitting a pizza with your friend. It's all about a specific tax form called the 1099-K. Let's break down what this actually means for you. Cash App, along with Venmo, PayPal, and other similar services, are considered third-party payment networks. By law, they are required to report certain user activities to the IRS. This report comes in the form of a 1099-K, which is basically an information return that summarizes all the payments you've received for goods and services through their platform in a given year. Now, this is where it gets confusing for a lot of people because the rules have been changing. You probably heard about a new rule that said if you received more than $600 for goods and services, you'd get a 1099-K. This caused a lot of panic. However, the IRS has delayed the implementation of that low $600 threshold. For the 2023 tax year, which you file in 2024, the old rule is still mostly in effect, which was a much higher threshold of over $20,000 and more than 200 transactions. The IRS is planning a phased-in approach, possibly starting with a higher threshold like $5,000 in the future before going down to $600, but for now, that super low trigger isn't in full force. The most important thing to understand is the difference between personal payments and payments for goods and services. The IRS does not care if your roommate sends you their half of the rent or if your mom sends you $100 for your birthday. Those are personal, non-taxable transactions. The 1099-K rule is specifically designed to track business income. This includes money you make from a side hustle, selling things on Facebook Marketplace and getting paid via Cash App, or any freelance work you do. If you have a Cash App for Business account, those transactions are automatically considered business payments. If you use a personal account, the sender might be asked if the payment is for a good or service, which is how Cash App flags it for reporting. So, what should you do? First, don't panic about personal transfers. Second, if you do have a side business, keep good records of your income and expenses. It's a great idea to use a separate Cash App for Business account to keep everything clean. If you do receive a 1099-K in the mail, don't ignore it. It means the IRS also got a copy, and you need to report that income on your tax return, but you can also deduct any related business expenses. The bottom line is that the IRS isn't tracking your personal life, it's making sure people are paying taxes on their business income, no matter how they get paid. Thanks so much for watching. If this video cleared things up for you, please hit the like button and be sure to subscribe to the channel for more simple explanations on money and taxes.